You've heard it 1,000 times. Renting is throwing money away. But what if I told you that's not always true? Let's break down the real numbers. Because when you actually do the math, the answer might surprise you. Let's start with the elephant in the room. The hidden costs of homeownership. When you buy a house, the mortgage is just the beginning. Property taxes, insurance, maintenance, HOA fees, and unexpected repairs all add up fast. For a typical home, these hidden costs can total over $20,000 per year. Now, let's compare what you'd actually pay each month. Renting versus buying. Say rent is $2,500 a month. Seems like a lot, right? But when you buy, you've got the mortgage at $2,800 plus those hidden costs at $1,700. That's $4,500 a month total. $2,000 more than renting. So how do you know if buying makes financial sense? Use the 5% rule. Take the home price and multiply it by 5% annually. This covers all those hidden costs. 1% for property tax, 1% for maintenance, and 3% for the opportunity cost of capital. For a $500,000 home, that's $25,000 a year, or about $2,000 a month. If you can rent for less than that, renting is the financially smarter choice. But there's another huge factor people ignore: mobility. When you rent, you have the freedom to move when opportunities arise. Better job offer in another city? Career change? New adventure? You can say yes. But when you own, you're locked in. Selling costs 6% in realtor fees, plus moving hassle and market timing risk. That flexibility to chase opportunities has real economic value. Let's look at 3 real-world scenarios to see when each choice makes sense. First, a young professional, 28, working in tech, career still evolving. For them, renting wins. They can invest that $2,000 monthly difference, stay mobile for career growth, and build wealth faster. Second, a growing family, 2 kids, stable job, good school district. Here it depends on their time horizon and priorities. Third, someone near retirement planning to stay 20+ years. Buying makes total sense for long-term stability. So, when DOS buying make financial sense? Here's a checklist. Staying 7 to 10 years minimum. Stable career and income. 20% down payment ready without draining your emergency fund. You genuinely love the location, and the local housing market is reasonable, not overheated. If most of these boxes are checked, buying can be a great choice. Here's the bottom line. Your choice is valid whatever you decide. Renting isn't throwing money away. It's paying for flexibility, avoiding hidden costs, and sometimes a smarter financial move. So stop feeling guilty. Run the numbers for your situation, consider your priorities, and make the choice that fits your life, not what society tells you to do.